I mean, at the peak of the pandemic, I was about to vomit in a bucket because of these violations to the graphs, if I can even call it that. But
hi guys, I really wanted to make a video and go back to the basics. In this video, I will cover 3 categories of stocks you need to know when making investment decisions. And if you start thinking of stocks like this, they will align more closely with your objectives. So let's get into the juicy bits. Firstly, no stocks are the same. And by categorizing stocks that are good into 3 buckets, that will dramatically sort of increase your chances of picking better stocks. I'll cover them off along with some core reading to delve a little bit deeper into each category. When we do first start buying stocks, we don't really have a clue, and that is a fact for everyone. Everyone has to go on that journey. We buy maybe too few stocks, we buy stocks we like, we all buy in the hope that the stocks will rise. We don't really think about what type of stocks we should buy, and it can be quite confusing when approaching the market like that. Now, I'm not a pro, so financial advice disclaimer, but it really is a simple process. Stock, as we know, make us owners of companies. We buy stock for return on our money, and different companies have different objectives. So when we buy stock and become owners, we need to think about why we bought the stock in the first place. Companies may want to expand, they may have leadership teams, they have customers and growth ambition, and the goals of each company are different. I mean, you wouldn't wear a ball gown to the gym, would you? And in analyzing these stocks, we need to think about the different ratios and strategies in assessing those companies themselves. Now, there are those categories that get branded around in press a lot and films, which we are familiar with. For example, penny stocks, cyclicals, and speculatives. And I don't want to mention it, but what's the movie that we all love here? So I do want to focus on the 3 types, and they should significantly improve your batting average, as I like to say, when picking those stocks. And the first one is growth stocks. And these are my favorite type, honestly. When investing in stocks myself, and what we all want to do is when we start picking stocks, and even if we don't articulate it, is that we buy a stock to beat the market. Growth stocks themselves are attractive for capital gains. That is growth in the underlying stock price. And instead of companies issuing capital to investors in the form of dividend, we want to see profits reinvested within the company, in the business, to grow it further, with investors expecting to benefit when they sell that share on. And really good examples of growth stocks I have to mention is the tech sector. So Amazon, Google, Slack, and Salesforce all fall into those growth stocks. These companies are completely focused on growth, and we should expect little to no income stream in the form of dividends. Investing in growth can be very rewarding, but you need to be in it for the long haul. And I love that phrase, and you may have heard me use that phrase of that investment horizon. Look out into the horizon and know that eventually you'll get onto the other side. And some good books on learning how to pick better growth stocks are The Zulu Principles by Jim Slater. Peter Lynch did one called One Up on Wall Street, and William O'Neill and his book on how to make money on stocks, where he actually talks through the can slim method. I should probably talk about that in another video. And another favorite of mine is The Naked Trader by Robbie Burns, I think. So yeah, I'll pop links down below. Don't worry if you haven't got a pen to hand right now. Right, the second type of stock I want to talk about is value stock. You've probably heard about these all over the interwebs. Value stock is bargain hunting, and made famous by the greatest investor of all time. Do I really need to mention him? I'll show you him here. But essentially, it's the art of finding stock below the intrinsic value and trading cheaper than what the market is pricing them at. It's a contrarian strategy when you think about it, in that you're picking stocks not priced per the market, and so in a way you're trying to go against the market, and so do again need to be in it for a long period of time. Now, when you do pick value stocks, they tend to be de-risked somewhat. Some are less riskier, not as risky, because we tend to pick the largest companies in the world. Some good shout outs for books that look into value investing are The Philosophy of Warren Buffett and That Bible by Benjamin Graham, which is The Intelligent Investor. And some gems which I think are not talked about enough, but I do like to talk about, are the Piotrowski scores. So if we are looking at indices like the FTSE 100, you can create the scoring system in Excel relatively easily. So I'd highly recommend checking and adding these screens when assessing value and income stocks. Which brings me on nicely to the third type of stocks, and one we talk about a lot too, and these are income stocks, guys. So do we like passive income? For all my homies out there, shout out, yes we do, and it's really nice, right? An income stock is one that focuses on purely paying consistent dividend stocks, and these are completely different to growth and value stocks, as they're focused on paying you money consistently, generating an income for you. Now, there are a few things to be wary of here. We're not looking for the highest dividend payers. In fact, we should be dubious of high dividends, and consistency is also important. Also, for the company to pay consistent dividends, it needs that quality balance sheet, and it shouldn't be paying dividends from cash it essentially doesn't have, which is a common problem when, you know, I don't know, there's a global pandemic and things hit the fan, you know. But I do cover some of these checklists in my other videos if you are interested, with a little bit more detail. And some reading that I would recommend around this one include Beating the Dow by Michael O'Higgins, and reading Dividends Don't Lie by, I want to say, Geraldine Wes. I keep looking over there because that's where my personal finance bookshelf is, and so I can have a quick glance and see what the titles actually are, because I will never remember otherwise. Both are really good books, but I would also suggest watching my video where I do cover the screen in a little bit more detail, and I'll link the videos at the end. So the question you might be asking yourself is, which type of stock shall I buy? Which one is right for me? Well, the choice is entirely up to you, obviously. However, some things you should ask yourself at the outset include, how much risk are you willing to take on? If you are risk averse, then stocks are a risky investment, and growth investing is probably the most volatile and riskiest method. The second question is, how long do you plan to hold the stock? Both value and growth investing require long holding periods. Third question is, what are my financial goals? Like, what are your goals at the end of the day? Before you invest in stocks, you should have that long-term goal in mind. You shouldn't really be investing with money you will need at a later stage, and the worst time to pull out money is when the market is going through a correction. So do think about these things before investing and deciding which type of stock to buy. Can you stomach the volatility with markets going up and down? I mean, at the peak of the pandemic, I was about to vomit in a bucket because of these violations to the graphs. If I can even call it that, but it felt like I was literally riding a roller coaster. And there's also that consumer sentiment. Buying and selling shares is linked to consumer behavior, and they are the end customer. And think about the investment horizon. The longer the better. As Warren Buffett did say, buy into a company because you want to own it, not because you want the stock to go up. So picking stocks is time consuming. Do your research. We also tend to overthink when picking stocks, so keep it simple. Know the 3 categories and build your strategies, your screens and your research processes around it. And if it does seem like hard work, invest in the market and know you're probably beating the vast majority. And I cover some more basic in these collection of videos here, so see you there, guys.